situation, listening is a trait that most people unfortunately don't have, right? Because I've come across a lot of entrepreneurs and people who are specialized or specializing in the area of business they control. And sometimes when they're negotiating, I can clearly see that their passion sort of overrides the requirement that they have from what they want to get out of the negotiation. And sometimes they end up being seen as either stubborn or as arrogant in terms of trying to negotiate certain deals, etc. But in any case, for those who obviously are new to the forum or something, I'll just do a quick intro. So as Michael said, my name is Rizwan. I work with TerraPay, which is a payments company. TerraPay started about 6 years ago as a real-time remittances business. We today service about 80 plus corridors. We have 15 regulatory licenses / approvals to conduct this line of business. We are tied up with over 500 million mobile wallets across Africa and the globe. So the likes of PayMaya in the Philippines, Alipay in China, MTN, Airtel, Safaricom, Vodacom, etc. across Africa. We are now expanding into the payment space. We have launched a product or a service in Congo, Brazzaville, which kind of caters to a interoperable payment solution for using QR codes with any source of funding linked to your mobile app. Could be a bank account, could be a card, could be a mobile wallet. Essentially to drive sustainable goals of the UN in terms of driving financial inclusion, bringing more females into the ecosystem from a financial transactions perspective, not just cash, and eliminate cash in the process of doing so. So, obviously in the process of building all these things, I've had the privilege of dealing with organizations such as United Nations Capital Development Fund in terms of pitching our services and solutions, talking in front of the regulators, whether it's in South Africa, working with BankServe and TCIB, which is the transaction clearing on instant basis platform that TerraPay is powering for the 15 countries in South African community. And then obviously dealing with the schemes and so on and so forth. So when Michael and I spoke about, sort of BNPL and partnerships and negotiations, clearly the first thought that comes to mind is going back to the drawing board with the card schemes where you have a 3-party and 4-party model, where you have the consumer as the end user of the instrument. You've got the issuer that essentially gives you the financing facility along with some other perks and benefits or rewards in exchange for your commitment to pay them on time, with or without the interest that you may be willing to pay or not be willing to pay, and essentially hold your account in good standing. And on the other side of the fence, you've got your acquirers, which obviously can be issuers as well, who are driving the facilitation of processing the payments to ensure that the goods and services purchased by the consumer can be offered by the merchants in exchange for settlements done at the fastest rate, so they can continue to manage their cash flows, continue to put merchandising on their shelves, or having their services up to date, and so on and so forth. And then obviously you've got the fourth component of this thing, which has been emerging in the last several years now, I would say last 5 to 7 years, is the processing business, or all the fintechs and all the other companies you can call them whatever. So I kind of broadly categorize them as sort of like the direct providers of BNPL, which are the likes of Affirm, Afterpay, Klarna, etc. Then you've got the facilitators, which could be Stripe, Visa, MasterCard, UnionPay, so on and so forth. And then you've got the retroactive providers who are basically giving the financing option, like the non-banking financial services people, the fintechs themselves, or the main banks. So when it comes to negotiations, clearly the first entity you have to build the ecosystem with is your merchant network. So whether you are the fintech for BNPL or you are the financial services organization that offers or wants to offer BNPL, your first line of or barrier to overcome is negotiating with your merchants and to bring them on board. Now, obviously, as I mentioned earlier today also, and we spoke about this yesterday, the cost of doing transactions under a BNPL umbrella is highest right now compared to credit card merchant discount rates and fees, where the merchant discount rates in various regions can go from government entities charging like 1% to as high as 2.25, 2.65%. Again, it depends on the region. Your BNPL service charges to the merchants can be 4 to 6%. This is kind of the merchant discount rate that American Express and Diners Club used to charge in the Middle East and Africa region, where they have the issuance business of Amex and Diners Club. So you have to obviously convince the retailer in exchange for what you're going to drive for them, which is obviously the carrot here is the incremental sales. Naturally, what the negotiation points that you have to cover, and then I think Abhinav mentioned this in his points, is the data element of it. So you as an issuer or an acquirer that is approaching a BNPL service for the retailers, you have to take something with you as a value add service to drive the consumption of BNPL. By going and saying that we will build this ecosystem and the customer base together, it's a pipe dream. You know, who's going to invest in it? Who's going to spend the marketing dollars? Who's making those commitments? Obviously, you can leverage the schemes to do that. But then again, I think it has been established. And if it has not been established, I think it's worth mentioning it again. BNPL caters to your low income segment who are not being addressed by your main street financial institutions today. So that is a point worth to notice, to say that, you know, without keeping that in mind, if you're going to position your negotiation power as a financial services organization to retailers from the same lens that you see cards and loans from, your chances of success are going to be slim. So you're going to have to really think about the underserved or the addressable segment that you want to attract, and what is it that you can offer to that merchant to bring those customers through the door. If it's a physical location or if it's e-commerce, how do you get the eyeballs on your products and services in the segment that may or may not have heard of you? So that's point number one. In the physical outlets and the physical space, and I think we touched upon it earlier just briefly now as well, and I see that happening in the UAE and the GCC region, because people still like to touch, feel, and see the products that they want to buy. So you're seeing a trend where the point of sale terminals are being provisioned by the BNPL providers. So it's another set of terminal at the point of sale at the merchant location, which kind of talks to the BNPL facility. And obviously the customer has the registration process through their mobile, and then they have to put in their credit or debit card details, which is basically used as a repayment method. So that's another thing that's interesting that Spotty and a few other people are doing in the Middle East, is at the time of registration, they're asking you for your debit or credit card details. They essentially run like a 1 cent or a 1 dirham equivalent of transaction to ensure that card is not blocked and the card is active and in good standing. So when your installment comes due, it's almost like a direct debit from your credit or debit card facility, if you have one. If you don't, naturally, some of the other ones opt to not have that facility and you can pay through other means. Naturally, you have to have some kind of electronic format of repayments. So your other negotiation power is with people who can collect the payments on your behalf. If you do not have the network to collect payments, you have to get a payment gateway in place as an e-commerce player. If you're a new entrant, or if you're an existing entrant, you have to do some adjustments there. The other party that I believe is obviously in the negotiation ecosystem is your processor or acquirers, in terms of what type of rates you can offer and what type of services you provide beyond just the processing of transactions. Clearly, there's data which can be monetized in different ways to drive and drive incremental business. So if I'm tied with a retailer today that specializes in clothing stores, I could essentially create 3 or 4 or 5 of them, create a benchmarking report from the data that I'm collecting, and entice other retailers to come on board by showing them that this is what you're losing out on by not being part of the ecosystem. So I think those are the key stakeholders that I personally believe, and again, I am by no means the oracle of information that has everything right, but I think those are the 3 or 4 stakeholders that I believe are in the negotiation ecosystem. I think the worst position, Michael and I were having this debate the other night, I think who's the worst at negotiating on these terms and BNPL? I think the banks. They have the weakest power from a negotiation standpoint, because they just have not figured out yet what is the value added service they're offering to these merchants and these partners that they want to bring in to offer the solution to their services. Who has the most power for negotiations? Merchants, because they're the ones who are basically offering the services to you. They will squeeze you to the every penny that they potentially can. The acquirers, sadly or fortunately, unfortunately, sit in the middle. So if you are an issuer and an acquirer, you obviously can subsidize some of the loss of revenue by negotiating on either side. So for instance, if you have to give up on the margin on the BNPL side as an acquirer, you can always compensate for that by negotiating a really good discount for your users to be able to use the BNPL service and drive the volume and build your balances on your own books instead of the customer using a third-party BNPL service. So if you are in the issuing acquiring business. If you are just an acquirer, you obviously have to then figure out what is it the terms that you can offer to the merchants if you're going to be the one financing the BNPL. So I'll pause at that stage. I don't want to create a monologue here. I would love for somebody else to jump in if there are questions, comments, or things that might be on your mind. Would love to have that interaction.
Great. Well, and Andrew, if I could, from your experience, you know, we can pretend you were a banker. You once were, I think, a banker, maybe not. But is it true that the banks are an easy take?
So from my experience working at the schemes, I think, I'm not sure who else is on from the schemes, but I would say we made it easy for them, because what tends to happen is the banks have become very smart at saying, here I am in an issuing or acquiring contract. I'll go to one office in the morning, negotiate, and then I'll go in the afternoon and tell my friends with the red and yellow circle that the guys with the V gave me X, and they'll just add X plus 5 and then go back again to the other place. And so I think the art of negotiation was lost for a while. Maybe on a serious note, when it was a membership organization, I think everybody was slightly guilty of that. I think the world has now changed, though, because there are shareholders and CEOs and bottom lines to think about, and bottom lines that you like, Michael, that ends in pounds, shillings and pence, not just anything else. I know you're very keen on numbers without brackets around them. So I think that has changed. It's I won't say it's tough, but it's tougher than it used to be in that respect to negotiate. But there's still a lot of room there. And again, I've always found that there's a lot of the schemes and the banks perhaps are playing catch up. And you know, this thing we've talked about many times, where it's easier to go buy something rather than create it yourself. It's easier to buy something that perhaps is affecting you and take it out of the marketplace. And I always think of it as sorry to use a football analogy, but when Jose Mourinho was manager of Chelsea, he just bought the 5 best players in the league and made them sit on the bench so nobody else could have them. And often I find that some of the schemes have been really keen to work with people and perhaps, you know, learn from them, but bring the idea in-house, and then it becomes a part of a larger organization and it doesn't get to where it should do. But I think the fintechs and where I am now, we've become a little bit smarter than that, and we want to retain our ownership and our individuality. So it's a better negotiation than it used to be, that's for sure.
Okay. Any other contribution? Alan, if you're still with us, would be good to hear your thoughts on who's best at negotiating. Baldeep, I hope I'm right in calling you by your first name, Baldeep. Would you like to make a comment?
Yeah, yes, Michael. Yeah, thanks, Michael. Thanks, Rizwan, for the session. So, Rizwan, my question is, as you mentioned that through BNPL, the lending institution should actually focus on covering the customers who cannot actually own a credit card through the normal credit underwriting route. Maybe we can focus on new to credit customers. But the only challenge I see here is, on the delinquency part, where we see a a lot of defaults happening on the digital lending sides, and the regulator has been very clear that underwriting and recovery should be managed by banks, and even processes like FLDG and all. RBI has made it very clear that it shouldn't, all the responsibility basically of recovery and managing NPA is on the bank side. So how, as a bank, we can make this process better if we have to, work with fintechs or acquirers? How do we manage this risk on NPA and recovery, please?
It's a great question, Baldeep, and I think I would say, maybe make 2 points of distinctions there. One of the things that I'm seeing with BNPL players right now is that one of the mitigants they have against risk factor is that they will give you the first transaction to try out for free, and they will block any future transactions once you've completed the repayment on the first one. So instead of having a consumer go bananas with purchasing everything on BNPL, they will give you based on some history that they have, or maybe some declared information that you've provided, to assess in an application scorecard format or something to ensure that you have the capacity to repay. The second question you asked about the collections and managing your risk factor. I think again, the comment I made, some of the people are essentially going after a new to bank customer by offering BNPL, but they're asking for their existing bank details for direct debits to ensure that you can debit their existing account with another financial services organization, a debit card or a credit card, to essentially do that electronic collection from them. In customer segments where you have cash on delivery being the dominant sort of mode of payment against these type of purchases in the past, what I also see there is that you have card on delivery type of services being offered instead of cash. That is being done through the expansion of prepaid cards and virtual card issuance for such individuals. So for instance, one of the things that is still yet to be scaled is the opportunity to have issuing virtual payment cards to a potential market that is registered with you for some kind of service offering. The credit facility that you would essentially give them, in most cases, you're settling directly with the merchant anyway for a BNPL. The consumer does not receive those funds. So you're paying the merchant for the purchase that the consumer has made. So in this format of a prepaid kind of issuance, you can always channel the funds through the prepaid card itself to be paid to the merchant in one transaction, sort of seamless transaction, where the customer does not hold the funds at all, but it's just straight through processing from the issuance to the merchant, and you basically have then the record of that individual to essentially link up for repayments. For traditional banks, the partnership opportunity still remains that you partner with somebody else who, the merchants who want to share the risk of the financing of these goods, especially for a scalable market and large market, which is very advanced in payments like India is. And I think, a lot of people, Nick even actually acknowledged that fact this morning. Your best bet is to basically partner with somebody on a shared risk management processes instead of taking the full exposure from a risk management perspective. That might be the best way to sort of mitigate losses. Second thing is start with smaller ticket size to see if those ticket sizes will be paid back on time, and then start using that customer data as history to possibly proactively offer them against purchases they've made in the past a slightly larger amount that they could use as a BNPL product or a service, and then you obviously ensure that you have risk management this way. I hope that answers your question.
We heard about retailers or merchants who don't allow you to take the goods until you've paid off in full. Do you have any observation about that? It doesn't sound like the best sort of customer service.
No, it's not. And Michael, in the UAE and the GCC at least, I mean, look, cash on delivery is 70% of the e-commerce business today, right? In the Middle East region. The ambition that all these fintechs have right now, especially with the BNPL emergence, is to displace that cash on delivery business with buy now, pay later. So I'm going to deliver the goods to you and you can pay later. But again, you have to acknowledge the fact that we live in a very controlled environment where default is not seen as a as a positive sign, and you have other penalties that could be imposed to you on you, including being blacklisted and being deported. So people are very careful naturally. But when you look at other emerging markets across Africa, Asia, or South America, etc., you can't really control the consumer behavior that well. So while that is not an encouraged practice, I have seen some Asian BNPL players asking for at least 25% to be paid upfront, and the remaining 75% to be
normal,
converted to BNPL.
I think that's normal, isn't it?
Well, not necessarily. Not necessarily. I mean, for large ticket items, yes, but for smaller tickets, they still would want 25% upfront and then 75%. So you kind of reduce your risk from 100% of lendable amount to 75%, and then hope the customer is going to pay. But then you obviously have this direct debit facility against which you can give the merchandising away. I mean, I'm sure, Michael, you remember the repo business in the US back in the day with auto financing, where you finance a car and you miss your payments, and a repo guy with tattoos and muscles shows up and takes your car while you're sleeping in the middle of the night. But you can't repo underwears and t-shirts here from somebody, right? Because it's going to be hard to get that off of the person.
They used to do something like that in Japan.
Rizwan, we're sorry to hear about your car getting repossessed. That's really terrible.
Well, one thing, I don't know whether it was you, Riz, that I heard say this or not, but there's a merchant in Pakistan that actually is offering a proposition whereby they will dress you. You know, let's imagine you're a man or a woman. They will dress you, you know, permanently and forever. You just need to pay a certain amount of money every month.
There's actually he's calling himself the dress coach or something, right? So his job is basically to guide you through a presentable. So you know, I'm sure you've heard of Mr. Dapper or Mr. Draper, I think, the box that comes to you with the preset set of clothes that you can basically keep and then return the ones you don't want, and you're paying a subscription every month of like, you know, £19 or something like that. So yes, there's this type of services. There are services, Michael, that you don't even have to buy a wedding dress anymore. You can actually borrow it against small installments, and then just pay it, give it back after your wedding, and gets dry cleaned and gets put back on the market like a used car lot that you have. So those type of things are also in the markets where obviously you're addressing a segment that has the aspirations to spend like they have a lot of money, but they don't have the access to those funds. So there's a lot of emergence of these type of businesses. So you're absolutely right. It's not just in Pakistan, but I saw a failed attempt on Shark Tank once, where this guy came on and saying, I dress people for success, and I'm going to charge them $25 a month, and this is my business. And he wanted the sharks to invest in him. And they, needless to say, they told him, "Thank you very much for coming in and goodbye," and send him back with no money. But
yeah, but you know the Nigerians are the Latins of
yes, they
Africa.
Are.
And so somebody in Nigeria, you know, Chichioke might think of going into this business as another sideline.
Oh yeah, you're absolutely right. Even Ghana, even DRC, Congo, Brazzaville, very colorful. I've seen the fashion sense there. It's very colorful and very vibrant. So definitely an industry which is untapped.
You know,
Rizwan, we'll give you the chance to say a word.
Well, yeah, there's the Guinness owners are selling Guinness in Ireland now using ads from, you know, the best dressed people in Congo and Brazzaville, etc. Like, so that's they know how to really show us what's
Ronan, you know the Guinness you get in Nigeria is 8%. It's not that weak stuff that you're used to.
Well, no, should they invite? We have it here in Ireland now because you know, there's a lot of Nigerians work in Ireland as well, and because they're here, they've the Guinness has been selling, you know, that super strength Guinness here for several years, and it's become popular among some of us. So Rizwan, thanks a million there for that. And we're going to, Michael, I'm going to ask you shortly to introduce Simon Dean Jones. And just before Simon comes on, obviously we heard yesterday and today some more cautious perspectives on buy now, pay later Simon, we heard Ian Rogers from Banking Day just before lunch telling us that he suspected that some of these big BNPL players in Australia are possibly headed for problems. He was observing that he had gotten the app himself, and nowhere in the app could he find anything about interest rates or fees or anything like this, which he was kind of surprised at. But as we know, in many places BNPL has not really been regulated yet because they've set themselves up as, let's say, fee earning businesses rather than lending businesses. And also yesterday we did have it could have been Rizwan actually, raised the point that if this area isn't carefully monitored both by the companies and by the regulators, we could be looking at something in a few years' time, which is a repeat of the PPI, let's say, scandal over 10 years ago. So, Michael, can I hand over to you? You can introduce Simon, who's going to tell us a little bit, from his perspective, with a lot of experience in the fintech field, about protecting the consumer and what we should all, watch out for and take care of.
Yeah, well, absolutely. Well, you'll be wondering, why we have a man with a good English sound.